Hello traders, welcome to Fourth Revolutionary Forex Institute. This is Kosnati, the founder and a senior trader of Fourth Revolutionary Forex Institute. So traders, here in this video, I'm continuing with the chart patterns. So for this video, I'm going to teach you how to trade head and shoulders patterns. Okay, so because there are two types of head and shoulder. So we have a head and shoulder top, and then we have a head and shoulder bottom. So the head and shoulder patterns in general, they are quite similar to to double patterns. However, the main difference between the two is that head and shoulder pattern, they are made of three legs, whereas the double patterns, they are made of two legs. So in terms of the head and shoulder pattern, they are made of three legs. So what you need to for you to quickly explain the formation of a head and shoulders pattern. So in order for you to quickly understand the head and shoulder pattern, you must think of yourself as a human being. So we as human beings, we have one head and then we have two shoulders. And then our head is above our shoulders. So this is the formation of a head and shoulder pattern. Think of yourself as a person. You have two shoulders and then you also have your head. And then your head is above your shoulders. Okay, so that is the formation of the head and shoulders pattern. So let's go. So there are two types of head and shoulder patterns. So we have a head and shoulder pattern top, and then we also have a head and shoulder uh, bottom. So let's start with the head and shoulder top. So this is the formation of the head and shoulder top. So the head and shoulder top, it has to be made by three legs. So the first thing that you need to know, it has to move. It has to move in an uptrend. Okay, the head and shoulder top, it must be formed in a bullish trend. So the market must move in a bullish trend when it's forming the head and shoulder top. The main reason for that is because the formation of the head and shoulder top indicates that the market will change its direction from bullish trend to a bearish trend. So we only use head and shoulder top just to execute the sell position, the bearish position, the short positions. So now let's go to the formation. So we have the first shoulder. So the first shoulder, we call it a left shoulder on your left hand side. So after the formation of the left shoulder, the markets will move down. Okay, same thing to the double top. So the same thing of the double top. So the markets make the first high, then the markets will go down again, and then the markets will have to find the support level after the formation of the left shoulder. Okay, so after the market has found the support level, the markets will climb back again to move above the resistance of the left shoulder. So the head will be above the resistance of this shoulder, of the left shoulder. So this will be the formation of the head. The head will be completed above the resistance of the left shoulder. After the formation of the head, the market will go down again to the resistance, so to the support level. So the support level is our neckline. So the market will move back again. And then when it moves again, it will find the support level, which is our neckline. Then the market will test again our neckline. Then after the market has tested the neckline, the market will climb again. However, this time the market will not move above above the head. However, the market will finish or will complete the right shoulder. This will be the formation of the right shoulder. The right shoulder will be completed in the same area as the left shoulder. As you can see, so just take an example of yourself as a human being. Your shoulders are actually on the same level, okay, but your head is above them. Okay, so this is the formation of the head and so this is the formation of the right shoulder. So after the market has tested the resistance level around the left shoulder, the markets will go down. Okay, and that will be the end of the head and shoulder pattern. So firstly, The head and shoulder pattern, it must be formed in a bullish market, because the formation of the head and shoulder pattern is the indication that the market might change its direction from bullish to bearish. Then the formation, so the markets will form the first high, which will be the left shoulder. After the formation of the left shoulder, the markets will go down, form, then test the support, find the support level, and then the market will climb up, and then the markets will form the head. The head, it's whereby the market will move above the resistance level of the left shoulder, which will be our head. After the formation of the head, the markets will go down again. When it goes down, it will find the support level, which is the neckline. After the neckline, after it tested the neckline again, it will climb up again. Thereafter, the markets will complete the right shoulder. The right shoulder will be completed in the same level as the left shoulder. Once the market completes the right shoulder, it will go down. But in terms of executing a trade, so let's go straight to the live example. So what happens here, as you can see, the market went up, went down. So the market went up and then formed the left shoulder, then went down and then find this support level. Then after the market find the support level, the market went up again. Then once the market went up again, then it came back and then nearly test the neckline. It doesn't have to actually go straight to the neckline, test the neckline, but it must be it. So after the formation of the head, the market will come back. The market might not, as you can see here, the market did not exactly test the support level, but it was completed around the support level, okay? And then the market went up again, okay? So in this case, the market formed like the right shoulder, and then the market went down. So you can see that after the market broken the neckline, the market extremely went down or extremely go bearish. So in terms of executing a trade, so because for myself, I have more experience, I'm able to execute a trade on the right shoulder, but I do not recommend for beginners traders to execute trades on the right shoulder, because this is not actually the rule for the head and shoulder. This is I'm able to execute trade on the right shoulder just because I have more experience in trading. So for you to execute a trade, you need to wait for the market to break this resistance, to break this support level, which is our neckline. So once the market break the neckline, as you can see here, the markets break the neckline. So some people can execute a trade immediately after the market has broken the neckline, or some people they wait for the pullback. Again, same thing applies as I've indicated when I was discussing the double pattern, that you need to wait for the pullback. So you can see that the market formed the pullback and then tested the neckline, and then the market went down again. So here you could have executed a trade here, put your stop loss above the pullback. However, if you execute a trade immediately after the breakout, you will have to put your stop loss above the right shoulder. So that will increase your exposure to the market. So traders, that is the definition of the head and shoulder top. So now let's go to the head and shoulder bottom. So the head and shoulder bottom, it must be formed in a bearish market. The price must be moving in a bearish side, and then it must form the first leg, then go up and then find the resistance level. When the market has found the resistance level, it has to go down again. And then the market, when it goes down, it has to move beyond the support level of the left shoulder. Same thing applies. You know that your head is actually go beyond your shoulders. It's went beyond the shoulder. So in this case, the markets went down and then go below the support level of the left shoulder. After the market has completed the head, the markets will go back to the neckline. When it goes back to the neckline, the markets will test the neckline, and then after it tested the neckline, it will go down again, but it doesn't go to the head. However, it goes to the same support level as of the left shoulder. So after the formation of the right shoulder, then you wait for the market, then the markets will go up again. When the market goes up again, the market has to break the neckline. Okay, so now let's go to the live example just to show you how to execute a trade. And this is the good trade. I would say this is a good trade. Even though I executed the market immediately after the breakout. So what happened here, as you can see, the market was moving in the bearish direction. So when it moved to the bearish direction, the market formed this first leg. This is my first leg, so which is the left shoulder. Then the market went up and then find the supports. Then after the support, the market went down again and then find the head. This is our head. After this head, the market went back again and then tested the resistance level. So now you can see that we have a strong resistance. Resistance, resistance, resistance. And this resistance level, we call it a neckline. This is our neckline. And then after, the markets will have to form the right shoulder. After the formation of the right shoulder, you wait for the market to break the resistance. So for me, because I'm more experienced in trading, I executed a trade as soon as the market touched the neckline. So, but for you traders, you wait for the market to break the market and then you to do a pullback, and then after the formation of the pullback, then you execute the trade. So you can see that's the formation of the head and shoulder. So for me, I just executed the trade immediately after the market tested again the neckline, because I supported my head and shoulder analysis with some other strategy. So that is why I executed a trade here exactly at the neckline thereafter the markets went up. So that's, guys, that is the formation of the head and shoulders pattern. So there are two types of head and shoulders pattern. We have a head and shoulder top and then head and shoulder bottom. Head and shoulder top, we only use head and shoulder top to execute sell positions, and then we use head and shoulders bottom just to execute the buy position, as I've done in these two. So, and before I go, traders, it's head and shoulders pattern is one of the most reliable chart patterns that you will ever learn. Thank you for watching, traders. I'll see you on the next video. Thank you for watching. Goodbye, traders.